Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Although we don't have change on the monthly time frame, we can see clear change on the weekly and the daily because we re-enter last week's range, and on the daily we can clearly see how we have a breakout from the 3-day balancing range back into last week's range. And it is important to highlight that we closed the gap that was standing from Monday at the open of the week, and we went above the 100-day moving average. That's a pretty significant change. We opened pretty close, well, not pretty close, I'll get to that in a second, but we had an initial gap at the open. Some of it was left, and we closed right at the top around the 29.40 area. So we had change on that front. However, we need to see, obviously, given the nature of the move today, we need to see if there is continuation or not, and where are we going to close the week. Are we going to close back up here above the moving average, or back below, close to this cluster of the 3-day moving 3-day balancing range that we had earlier in the week? Looking at the market profile, we can see, well, we gap up. The open was around this area, very close to the 2900, and if you remember correctly, the overnight high was somewhere around here. And what it was deceiving this morning is that in the first 20 minutes of the session, it attempted to go several times above the overnight high and only was able to do a few ticks above, and it kept coming down. Then when it was around 8:50 or something like that, 10 minutes left for the change period, it started coming down, and it looked like it was going to close the gap, but it stopped like 3 ticks from yesterday's high, and that's when the responsive buying came in. And from that moment on, we just trended up for the rest of the day. You can see here, after the third period, the gap that was standing there from earlier in the week was closed, and you can see the pretty potent one-time framing, 1, 2, 3, 4, 5, 6, 7 periods until the H period pulled back a little bit. So the second part of the session basically was a balancing around the 2nd of August value area on POC was pretty clear. It was balancing around that area, around the 29.28. And then late in the session, we had a spike to the upside, which obviously, as we do in this type of situation, the focus for tomorrow's session is on assessing continuation or lack of it from this late spike. Now, there isn't much to add. This is a pretty significant change. We've seen in the last couple of days how the upside was getting some footing, because on the last previous sessions, the last couple of sessions, we opened at the lower side of the range and we ended up closing at the top. That happened again yesterday, and it was a pretty bullish move that we saw yesterday. So it's not surprising that we have today the breakout to the upside. However, the word of caution come because although volume was okay, was decent, it was not the big volume that we've seen earlier in the week or that we saw on the way down. That's number one. Number two, leaving only 3 ticks excess. It's very questionable. Well, yeah, for a move of this magnitude, launched from such a mechanical buying area, we need to pay attention to what happened next. And the other important clue is that the buying seems to have been pretty emotional. It left 1, 2, 3, 4, and 5 distributions at the end of the session, and so the structure clearly is not the strongest one over here. So as long as we keep bidding and we keep finding acceptance here, well, it can continue moving forward, but this over here reduces the odds of a strong upside moving forward. I would say that it needs some repairing before it can go up. But okay, so we keep an eye on that. Absolutely, it can continue higher. Just a word of caution because of those three things. The underlying weak structure, this questionable uh, gap over there, pretty small. And another important thing that I almost forget to mention is that at the bottom of that balancing range that we had earlier in the week, which marks the low for a few weeks, there's almost no excess. This is just 2.5 points. And let's remember that the market moved down around 200 points from last Thursday. So if you move 200 points almost on a straight line and then you leave no excess, this is a very interesting data point that we need to carry forward, because if this move today at some point fades and we start gaining momentum back below 2900, definitely this low will get in play. So as I said a few minutes back, the focus for tomorrow is on value development relative to this upper, well, this two upper distribution, but with particular attention to this late spike. We had a base of that spike right at the POC at 29.2750. If we get acceptance below that level, that will denote change, and it will increase the odds that at least we'll repair some of the weak structure. However, if we get acceptance within or above, obviously that increases the odds for continuation, and that definitely will bring into play the high from the 2nd of August, which is at 29.46. As we always say, anything can happen because odds are just odds.